Hello, welcome back to CRE N More, episode number 6. This is your friend, Realtor TomTseng, who specializes in commercial real estate. And I have my well-known partner, Simon Ye from SYH Solutions.
Hello, everyone. Welcome to the show, CRE N More. Today, we'd like to welcome our trusted partner, Vic Steele and Micah Peterson.
Vic is a retired police detective who is now a residential real estate broker, and he has opened a brokerage in here, Diamond Bar. And Micah is an independent mortgage broker who specializes in residential lending.
So we'd like to have Vic introduce himself, please.
Well, hello, I'm Vic Steele of Alongside Realty. I have been a real estate broker for 21 years. I was a law enforcement officer for 19 years until an unfortunate medical retirement. And I very much have enjoyed my switch to a completely different industry. I've now been doing real estate for longer than I ever did law enforcement. So it feels like I'm a realtor first and a retired detective second. I'm also an author. I wrote a children's book about adoption, documenting the adoption of my son from Ukraine and my daughter through the Orange County Social Services System. It's a fun and different look at raising your adopted children. It's called Always Mine. And let me turn it over to Micah to introduce himself.
Yeah, hi everybody. My name is Micah Peterson. I am a mortgage broker, licensed in California and Idaho, and also been a broker 21 years as well. Vic and I actually met right at the beginning of both of our careers in this business, so we go way back.
Excellent.
What inspired you to get into real estate industry when you retired from police service?
It was actually a bit of a fluke. I wasn't sure what I was going to do. My medical retirement was completely unexpected, and I was just working as a handyman trying to figure out what I was going to do next. And the real estate broker that sold me my house called me and asked me to come to work for him, and I thought, why would you want me to work for you? And he said, I think you'd be really good at it, Vic. And I took a bunch of my buddies from the police department out to breakfast or lunch over the next week or so, and I asked them what they thought about me getting my real estate license, and all of them were like, yes, yes, yes. We'd love to have somebody that we could trust with our homes and with our home purchases. And so I did. I got my real estate license, and for the first couple of years, all of my clients practically were police officers, social workers, and teachers, the people that I'd been working with for the last 19 years.
Oh, wow. How about you, Micah? How did you get into a mortgage industry?
I got into the mortgage industry because I was looking for a business that I would be able to set my own schedule and work from home if I wanted to. And so that is the main draws initially.
Nice.
Into the mortgage business. Yeah.
Were you in retail before, or have you started as a broker?
I've been a broker the whole time.
Oh, wow. Excellent move.
Yeah.
Wow. That's different because my path has been retail, direct lending, and then brokerage. So you went right in. And for 21 years, I mean, you probably see the market changing a lot, right?
Yep.
And Vic, in this year, I hear that from CAR, California Association of Realtors, that we have overall 5% less membership in the year of 2024. And while a lot of brokerages are closing, I hear that you opened a brand new brokerage that is called Alongside Realty. I want to learn what makes Alongside Realty a great choice for agents seeking mentoring and guidance, especially with the new California case laws in mind.
Well, at Alongside Realty, we prioritize mentorship because we understand how overwhelming legal and procedural changes can be. That's why so many realtors quit the industry. As a broker, I stay ahead of these changes, offering personalized training and hands-on support to ensure agents feel confident and compliant. Our collaborative effort here, the collaborative environment makes it easier to succeed even in this rapidly shifting landscape of case law and pages and pages of new forms that are coming into place on January 1st.
I see. How about you, Micah? From a client, when they have first of the thoughts, like I want to buy a home, until they get ready to close, how much time does that usually take? And do they need to do anything to pre-plan ahead of time?
Yeah, good question. How long it takes, it's totally case by case basis. I've had some clients where I've met them on a Friday, they're out looking at houses on Saturday, and they're under contract by Monday and closing escrow 3 to 4 weeks later. I don't recommend that strategy. And then on the, at the other end of the spectrum, I've had clients where I've had, an initial consultation with them, and then they don't end up buying a house for a year or 2 years, or I think longer. I think Vic, the record for us is like pushing 3 years from the first time we met with client to when they closed escrow. So, I would say ideally someone's going to start getting ready at least 3 to 6 months before they're planning on making a move. That way, if there are any, unforeseen surprises, maybe something shows up on their credit report that they didn't know was there, or they're going to have a job change and they didn't think that was going to be a big deal, or things like that, where if there's a little bit of time before actually getting out to go look at houses, then we can get out ahead of anything that we need to make the process as fast and easy as possible for them once they've found the house and are ready to get out there and make offers.
I see.
I've had clients come to me that have an offer accepted and don't even have an idea of what the numbers are going to look like, and that just tends to be a more stressful process for the person buying the house.
Right, Micah, I was going to ask you this question. You hit it right on. So what happens if you get a referral, a client's already under contract and they want you to help them with a loan, and they haven't gotten pre-approved by either banks or loan officers?
Yeah, so it happens. My job is really to, collect as much information and data as possible to make sure that I've got everything that I need to put the clear picture together for the underwriter to get that approval as streamlined and seamless as possible, even though it might be, late in the game. Which is the same thing I'm trying to do ahead. If they talk to me, 3 months ago versus right now we're under contract, is try to look at the whole overall picture and try to think about, okay, what are the questions that the underwriter is going to ask about this file, and then to try to get them answered before we even turn it into the underwriter, so that way everything again is as smooth as possible for everybody involved. Yep. The loan tends to be one of the main things that kind of trips up a deal.
That's right.
Loans and inspections, let's say. So if I can get everything I know that's going to be needed to get a quick approval, then even if they come in under contract, we're getting approvals, same day or next day right now. So it doesn't take very long to actually get the file reviewed. So if somebody comes in already under contract, I would say the key word is thoroughness. Just to be as thorough as possible when we do go and turn everything in for the approval.
Gotcha. And Vic, what are some of the biggest challenges you foresee for buyers and sellers in 2025? And how do you think that you can help them prepare?
I think for buyers, affordability is going to continue to be the biggest challenge. But we'll work with lenders like Micah and you to come up with creative financing options, and having a pre-approval is the game changer. I need that information to negotiate.
Mhm.
I can't negotiate without all the best information. And then sellers will need to focus on realistic pricing as the market adjusts to demand. The demand is slightly lower right now. I do not see the market collapsing as you see many brokers predicting.
Mhm.
I see creative financing being the key to us moving forward in the current California market.
Mhm.
My advice is to start conversations with a trusted broker early so you can plan for the best timing and the best strategy and ultimately the best negotiation.
What would be some examples of the creative financing that you're referring to? And is Micah the person that we will be collaborating on?
Micah's always my first call. It could be a first and a second. That was a very popular solution when prices first went up about 15 years ago. It could be a silent second. It could be a seller carryback where the seller carries part of the note, perhaps a balloon payment 10 years down the road. It could be a 40-year mortgage. We heard conversations about 40-year mortgages come up 15 years ago. I expect those conversations to come up this year, absolutely, and that will lower payments for buyers, and it'll enable sellers to get the best possible price for their home.
I see. Being on the title is the key of the game. Once you have the real estate, you ride on it and appreciate alongside of it.
Absolutely.
And Micah, how do you educate your prospective buyers to pre-approve them? Do you give them some guidance about credits, how they should save up for their down payments, things like that?
Yeah, definitely. And so what I talk to people about is really a matter of figuring out what their comfort zone is. And to me, the definition of a comfort zone is it's a balance between what their down payment is going to be, what their monthly payment is going to be, and then how much money they want to have left over after the fact that they've bought the house and closed escrow. And so it's really finding a balance between those three key factors for my clients. Again, depending on how early we are in the process, talking to them about things that they can do to help them get closer to that comfort zone that also gets them into the kind of house that they want to buy. So there, things that can be done, ahead of time to help them, boost that purchase power. I would say in my experience, the number one thing that reduces people's purchase power is auto loan payments.
Right.
I've just seen it over and over again where a car loan kind of kills the deal.
Oh, yeah.
For somebody that wants to buy a house, because it really puts them at a disadvantage when it comes to what they can qualify for, too, because of that.
Micah, you had that recently. It was a Cybertruck purchase.
Oh, wow.
Yeah.
That's over $1,000 per month.
That's an extreme example, but exactly, yeah. So,
and then also recently we had one where Micah had them pre-qualified for a very high purchase price, but it was not in their comfort zone, and we ended up shopping, putting them in escrow and closing escrow about a third of the amount that Micah had them legally and reasonably qualified for, because they wanted to do other things. They wanted to travel. They wanted to build up the property outside of the house. They wanted that money. So it's not always about going out and buying as much as you can afford. So sometimes we really rein it in. We've got over 21 years. Yeah, but just in the last year, we've got multiple examples both ways.
Gotcha.
That's one of the things that I tell people is that a lot of times people can technically qualify for way more than they're going to be comfortable paying every month. And so I'll show people like, okay, this is what your max is, and this is, where your comfort zone is. And most of the time what ends up happening is people realize like, okay, yeah, I could probably stretch a little bit, still 100% within guidelines and pre-approved, but not nearly the maximum that they qualify for. Because, we hear a lot about, oh yeah, the underwriting guidelines are so much more strict now than they were back in, 2005, 2006. They are more strict, at least in that you have to document most everything that you're putting on your application, but still people can qualify for a payment that is a significant portion of their income. And when underwriters for a mortgage are qualifying people, they're not counting things like food, gas, utilities, tuition, or anything like that. None of that is factored in when somebody's getting approved for a mortgage.
That's right. They don't even count those subscriptions that they have, right? Like
premium, I mean, it's the mortgage, the property taxes, the home insurance, and then any debts that are on the credit report. That's all the underwriter looks at that says, yes, you're approved for this loan. Oh, and then the other thing is they qualify people based off of their gross income before any taxes are taken out. And so they're not counting taxes being taken out. So that's where a lot of that pre-planning and budgeting ahead of time can come into play.
I'd like to come back to Vic. You mentioned earlier that there is a lot of new rules, new law changes starting from January 2025. Can you tell us some of the new changes, and how are you helping your agents prepare for the major changes coming to California real estate contracts on January 1st?
Well, I'm already preparing. I've been breaking down the changes into digestible training modules, focusing on real life scenarios that agents will encounter. By the time January 1st rolls around, our agents and alongside Realty will not only understand the updates, but they'll know exactly how to apply them to serve their clients effectively. A great example is the buyer-broker agreement. A lot of agents out there don't understand that you can't ask for more of a commission than you've already agreed to on the buyer-broker agreement. You're limited by that amount. You're not entitled to that amount either. If you want that full amount and you can't get it from the seller, you have to ask the buyer for the rest if you want that full amount. It's not an entitlement. And I'm seeing a lot of significant misunderstanding in the use of that buyer-broker agreement. I think that's going to be one of the more significant things we see moving forward.
Yes, and facing the buyer's objections because they are not used to paying the buyer's commission as well yet, right?
Yes, and what a lot of the agents out there are doing now is they're telling the buyer, don't worry about it, I'll get the seller to pay this. That's not always the case. I don't think don't worry about it, I'll get the seller to pay this is the right language to use in that scenario. I'd be much more comfortable with language along the lines of, this is the most I'll be able to earn in this transaction if the seller contributes to the commission amount, and I'll do all I can to negotiate that the seller contributes the entire amount. But I may or may not be able to do that, and at that time we can have a conversation about what a reasonable commission is for me to help you get this home. That's a much more reasonable conversation than don't worry about it, I'll get the seller to pay it.
I see. And I know you focus a lot on your agent development, agent training. What advice would you give to newer agents entering the market with all these legal and contractual changes?
Well, that's easy. Find a broker who prioritizes mentorship. Find a broker that answers their phone. Someone who'll guide you through the complexities, not just hand you a desk and charge you a desk fee. And second, commit to ongoing education. That license didn't come in a cereal box. You earned that license through education. But there's continuing education that's not just a requirement legally, it's a requirement for you to be a professional. The rules are always changing, and staying informed is the key to protecting your clients and your career, and at Alongside Realty, we'll help you do that.
Thank you.
And now, Vic, for sellers, what do you recommend for the sellers to do when you talk getting listings for the challenges in 2025?
Well, I recommend that they work with a professional broker that can explain all of the different possibilities. I've got a fourplex for sale in Long Beach right now, and the last 2 phone calls from agents have asked me if the seller would do a carryback second. And again, that's where the seller carries the, say, $200,000 of the $1.1 million purchase price as a balloon payment or as a set interest payment over a certain amount of time. In this case, I've educated the seller, and he's willing to carry a reasonable second. So, yeah, you've got to educate him completely.
In that example,
but would
Micah,
a seller carry payment like take into like the first mortgage? Let's say if they're originally qualified for 800K and there is a 200K, will they allow the secondary loan since the buyer will still have to make payments on the other 200K?
Micah?
Yeah, it just has to be factored into the qualification ratios.
Okay.
So
do you have lenders that allows seller carrybacks? A few of them, or okay?
Yeah.
Are those usually portfolio loans or not a regular loans, right? For those seller carrybacks?
Yeah, more so on the portfolio side.
Got it.
For the past 20 years, it wasn't unusual for buyers to come to you and say, "Hey, we're gonna sell our condo, and mom and dad are gonna sell their house, and we want you to find us a 5-bedroom house that we can all live in with a downstairs bedroom for mom and dad." That was a really standard request. Well, these days, that house I just described is well over $1 million.
Right.
So I think we'll see those multi-generational households going into smaller houses, and we'll be putting an ADU, an adult dwelling unit, into the backyard for probably for mom and dad, but sometimes for the younger generation. And that's when we bring in our trusted referral partners to help get that ADU designed and built. I think that'll be a very common solution in 2025 and 2026 is that smaller house with an ADU in the backyard for the multi-generational family situations.
And Micah, talking about this year, 2024, there's a lot of changes in interest rates. Of course, we're not here to discuss about rates, but a lot of buyers or a lot of homeowners are expecting or hoping and praying for the rates to drop. What do you foresee in 2025 about a trend?
My crystal ball is currently in the shop getting fixed, so I'm not sure. No, I would say it's really hard to say, really, still at this point. But from what I've been seeing is that I think the markets are generally a little bit less optimistic about much lower rates than they were, say, back in September. I don't think unless there's some big global events that we'll see any huge moves up or down from where they're at right now. So I saw a lot of lenders especially hoping for much lower rates heading into the coming year, try and get some more refinance business from people that are at higher rates. They'll probably be pretty steady, would be my guess. I always direct people to the Freddie Mac weekly mortgage survey because that is a pretty good indicator of real-time mortgage rates and about where they're at. It's a week behind on data. I tell people you can go there and you can see a weekly survey on rates. I'm just pulling it up right now.
Sure.
So it's freddieMac.com/PMMS. And so this, they just came out yesterday. Average rate on the 30-year fix 6.85%. Okay, so what that's going to give people a good idea is going to just kind of a pulse on the market of where the 30-year fixed mortgage rate is at. It doesn't show how much people are paying in points to get that rate anymore. It used to, but they stopped showing points. So you also have to keep in mind that does include some money being paid to buy down to get that rate. You don't have to worry about clicking on it and then your phone's going to start blowing up with a million different telemarketers trying to sell you on a mortgage, where that does happen if you go just about anywhere else and click on something. And everybody is marketing wise, everybody's trying to, advertise the lowest rates possible.
Right.
And so, you'll see something online or you get some junk mail in the mail. It looks a lot better, maybe too good to be true. Usually it is.
Using the 3.6% that you just mentioned as anchor point, that I assume that's not the price that the buyers would actually get. Usually, like the lender will have to make some money on top of that, right? I'm assuming that's the money that.
That's an average that they posted. Yeah.
Cost for a
Yeah.
lender.
So Freddie Mac is posting the average of what they're seeing on 30-year fixed mortgages. They also have the 15-year there. But again, like I said, what it doesn't show, this survey used to show, was the average amount of points paid to get that rate. It doesn't show that anymore, but it's still there. It's just they don't say what it is anymore.
But they don't show APR either, right?
No. Yeah. So this is the the note rates on average across the country that are being closed on the 30-year fixed and the 15-year fixed. So again, what I like about that one is that it's not an advertisement, and it's real-time data of loans that are actually closing.
Hey Vic, earlier you mentioned some of your listings in Long Beach and how you convinced the sellers to go with creative finance to help with sales. I would love to hear more about your current listings and how are you making it, what makes them attractive projects for buyers?
Well, it's 2025 now, and you've got to start with professional photography, professional high definition photography with little or no Photoshop work done. Buyers are educated and they expect to see your home on the internet. I'm surprised at how drone footage has gone from being something, no, to, do you have any aerial photos of the property? Drone footage has become very standard. I'm a huge fan of the Matterport technology. That's a 3D digital scan of the property where the buyer can literally tour the property virtually, look up, look down, look from room to room, and really get a feel for it virtually. Big fan of the Matterport technology.
Talk about your current listings that you have for sale.
Oh, I've got a gorgeous 3-bedroom, 2-bath in Oceanside for sale right now in a beautiful gated, secure community for $750. 10 minutes for the beach, really nice. And then I've got a nice 3-bedroom, 2-bath home in San Juan Capistrano right now for $850.
Great price.
Yes.
And did you have a multi-unit earlier? Did that got sold as well?
A four plan. No. It was unique. Even with it being the holiday weekend, I got 2 calls asking about a seller carryback on the $1.1 million fourplex in Long Beach. Now, what's unique about this one is off-street parking. That is a huge draw for tenants. Market rents there are $1,600 to $1,700 a month for 1-bedroom, 1-bath, and the seller is willing to deliver the property vacant. So you could put 4 people in there at $1,600 a piece, and the numbers are beautiful. And having off-street parking, they're going to pick your apartment over almost anything else in the neighborhood. It's a really unique opportunity.
Well, 1.1 or 1.2, right?
Yes, 1.1.
$1.1 million, they get to buy this 4-unit residential, and possibly the buyer could live in one of the unit as a primary residence. Would that be a possibility to qualify for the primary residence?
If it legitimately can be,
Yes.
I mean, if all the units are occupied and nobody's going to be moving out anytime soon, then that wouldn't work.
And you can get creative. We put 2 veterans. We combined 2 veterans benefit recently, and they moved into 1 unit, and they rented out the other 2, covered their mortgage. It was a beautiful thing in San Diego. You remember that deal, Micah?
Oh yeah.
Wow, I see a lot of team play here. That's
Yep.
definitely a key to your success, I noticed.
Very
And
much key to our success.
I know you're a full service brokerage, meaning you also handle property management, Rick. What makes your property management approach stand out in the industry?
Oh, we focus on proactive communication with both the tenant and the rental property owner, and strategic planning. We manage properties like they're our own. We handle tenant relations like it's their home, and we care about the maintenance and the compliance issues. And this way the owners can focus on their investments without any additional stress, and the tenants know that we're going to take good care of the property while they're living there. It's not going to get run down, and they don't have to tolerate leaks and things like that.
I see. How do you help your property owners to stay compliant with complicated tenant laws?
Oh, California's tenant laws are some of the toughest in the nation. Staying compliant is critical. We educate our property owners on these laws, and we manage all the paperwork, the deadlines, and the inspections. This protects them legally while fostering positive tenant relationships. It's really a matter of taking ownership of it and handling things for them.
Last question on the property management part. What is the biggest opportunity for property investors in 2025, and how can effective property management help them take advantage of it?
I think the biggest opportunity lies in maximizing cash flow through short-term rentals, and that's gonna really up the management responsibilities of a company like mine. But it's an opportunity to maximize cash flow for the right property. That property in Oceanside is a great example. That would make a great short-term rental property because of its proximity to the beach. Adding ADUs to existing properties is also one of the biggest opportunities that I think a significant number of current homeowners should consider. It's remarkable the tax advantages and the potential cash flow, especially for people that maybe they're on a fixed income, a Social Security income or something. Perhaps we could do a cash out refinance with Micah. Again, I don't like to speak on these things. I like Micah to speak on them, to fund the ADU, and then they could have a positive cash flow with a rental property in their backyard or over their garage.
Can you elaborate a little more for our audience what ADU is, and is it like a development opportunity, or how do you make money in the process?
Well, an ADU is an adult dwelling unit. They used to call them mother-in-law quarters, okay, but we call them ADUs now. So an ADU is an adult dwelling unit, typically in your backyard, over your garage, or convert your garage into the adult dwelling unit. It's a studio, typically a studio one, every once in a while a 2-bedroom unit with a kitchenette and a living area. There's specific design issues that you'll encounter depending on what your footprint of available space is to do the property and what your needs are. And again, really proud to say that we have a trusted referral partner, a couple of trusted referral partners. They're going to get you from start to finish on that.
Do you finance the ADU construction loans by any chance?
Well, the short answer is yes. But my experience lately is that the people that are doing these ADUs are people that, at least the ones that have come to me for help, they have, mortgage rate in the 2s or 3s that I got them back in 2020, 2021. They don't want to touch that, but they have a massive amount of equity in the home. And so what I've been helping people do is to get into, a fixed rate second mortgage or maybe a home equity line of credit to finance the construction of the ADU. I've helped quite a few people do that. That's just my clients and what I've come across. That's generally how I'm seeing that get done. I can do ground up construction on residential 1 to 4 unit properties, but that's very rare. And from what I've seen, most of the time it's people that already have a property, they already have a mortgage, they've got the space, and they want to build an ADU or like Vic had mentioned, convert the garage to it.
So Micah, on top of that topic, what do you see for your investor clients? I mean, when they want to qualify, they say they already have a condo or they already have a single family home and they want to invest into other residential investment properties. How do you get them prepared? And what kind of timeline are we talking about?
I would say, again, it's going to be ideally start, planning and preparing, 3 to 6 months ahead of time. Mm-hmm. And then it's really, that's where I'm pulling a lot more on, Vic's resources and the hypotheticals of like, okay, if you want to go and buy this other property, I can help them figure out what they qualify for, but then Vic's going to go and then say, okay, yeah, if we're looking in that market, then what are the rents going to be?
Right.
And that's where his property management experience really comes into play as a huge resource, because again, it's like just because somebody might qualify for something and be able to do it on paper, it might not be a good idea. Mm-hmm. For example, Vic and I were working with a mutual client, mm-hmm. and I've had this client for like 12 years, and he was thinking about maybe renting his house out and going and buying something else. Mm-hmm. And so Vic went out to go talk to him about property management,
right?
And ended up, Vic was like, you need to stay where you're at, but let's get your kitchen redone and your windows done. And so we got some good solid referrals for him for that. And now that, opened up the kitchen, and this was an older guy, and
right.
It ended up like, yeah, he could have done that, but it wasn't in his best interest.
Sure.
And the guys called me like 3 times just to thank me for, oh my gosh, I'm so glad that it worked out this way. Vic was awesome. The guys he sent over were great.
Can you share some of the most commonly seen roadblocks faced by buyers when applying for a loan or during escrow?
Biggest one I touched on previously is payments that are just too high on other things that are going to keep them from being able to qualify. Other things that I see are people maybe thinking about a job change or a career change, or even more specifically like a change in the structure of their income during COVID and pandemic, where a lot of nurses were going to being traveling nurses, and they made a lot more money, but then they were going from being a W-2 employee to a 1099, so they weren't able to use that a lot more money to qualify, because there has to be a history of getting that kind of income before you can use it to qualify. Same thing with like looking at someone's overtime or bonuses that they get. It's like, oh well, no, I make an extra $4,000 a month in overtime. It's like, well, but they've only got it for the past 3 months, so it doesn't count yet. And so those are the kinds of, I would say income and debt related issues are probably the biggest roadblocks that I see that people need when they come up. It's the kind of thing that people need to overcome before they can buy a house. And sometimes it's a matter of budgeting. Sometimes it's a matter of timing.
I'm very, very intrigued by the experiences that you guys put together and the trusted partners within the team. Can you give us some examples where you have helped people resolve the challenging situations while selling a home or buying a home?
Lots of them.
Yeah, there's so many of them.
I know you had one with Ulysses, and then like Jose Mesa or something, and Carlos you mentioned.
Oh, okay. Yeah, that was it was a manufactured home on a foundation, a ranch property, and the listing agent said that there's no way that we could sell it with a loan. It had to be cash because it was in such poor shape. And I said, give us a couple of weeks. and we took care. We converted that property. Holy cow! Hard work, long days, and permission from the seller to work on the property, and we did such a good job of that property. I didn't want the seller to see it because he could have pulled the rug out from under us. You know what I mean? And we would have had to fight. It would have been fine, but he would have tried to pull the rug out from under us, and I'll tell you why. That the day we closed escrow on that home, after getting the architect to certify the foundation and the deck and everything we had to do with that, a neighboring property listed for almost double what our clients paid. That was a big day for Micah.
Wow.
It was almost exactly double. So our clients, they have a loan on the property that's less than half the value of the property.
Wow.
Yeah.
That's a steal. In today's market, that's rarely seen. You don't even see that in auctions.
Especially, a young family. It was amazing. And Micah, you remember that one in Orange, the couple that was in the apartment, and it was back when there was all the foreclosures, and I called you and I said, this listing agent who's working for the bank does not know the Orange market. He's listed this property like it's in Santa Ana. We need to do this now before he gets 27 offers. And remember that one? And these kids went from living in an apartment, a little 1-bedroom apartment, to living in a 3-bedroom, 2-bath house in a really nice neighborhood, and they had to wait 6 months because that's the way it works. The mortgage industry works. But they refinanced at 6 months, 80% loan to value after buying that home with an FHA loan, 3.5% down. We got them into that property because the listing agent didn't know what he was doing. He had no idea. Got them into that property so inexpensively that, and the only other time they refinanced 15 years later was a couple of years ago when Micah put them into a 2.5% loan. So
they're like the best winners of all.
Yeah.
And being a already seasoned veteran and very successful broker as you already are, what inspired you to focus on mentoring other brokers, and how has that shaped your business philosophy?
Well, I've always believed in the power of mentorship, and it's what shaped my career. That's how Micah and I met. We were in a mentorship program as brand new people to the real estate industry. It was a wonderful mentorship program. And we've been mentoring agents and lenders ever since, because the real estate as a career can be daunting, but if you got someone to guide you, it makes all the difference. And that philosophy, it drives everything we do at Alongside Realty. We're alongside our agents and clients every step of the way.
And then, Micah, just want to talk to you a little bit about being an independent mortgage broker. I know it does close faster. What is the fastest closing that you've done for purchasing or refi?
I think, I've closed a purchase loan. I think it was like 12 days, I think.
That's awesome.
It was 12 days.
Yeah. It was one with you.
Yep. We would have closed faster. Remember, was it title or HOA docs? Something held us up 2 days.
Something held up, a day or so. Yeah. There's a minimum amount of time that you can close just because of the way the disclosure timeframes work. I've had that happen before, where it's like, no, we can't close yet because we have to wait till the cooling off period's done for the CD that went out, things like that. The way I like to think of it is like, we do things quickly but not rushed. I only go at whatever someone is comfortable with as far as their pace goes. But there's been times where we've had to we've had to just get it done in a certain amount of time because of extenuating circumstances, and that's just what it's going to take to get the deal closed.
I have last two questions for Vic before we wrap up, if you don't mind. Vic, can you share a success story that reflects your approach to mentoring real estate or property management?
The two veterans. I think that's one of the most outstanding examples. The one helped him buy a house about 12 years ago in Fontana, and over the years he built equity in that house, and then when his brother got out of the Army and went to nursing school, once he graduated and had a job as an RN also. They're both veteran RNs. They came to their U.S. Army veteran broker, and they said, hey, can we buy a property together? And I called Micah. It's like, hey, can we do this? And Micah said, yeah, you can. And much to our surprise, they qualified for $1 million purchase with 0 down.
This was pre-2020.
Yeah.
Right.
So
yeah, this was pre 2020.
It's when rates were higher, which when rates went down in the 2s and 3s, it was easier to qualify for a bigger loan. So
That's right.
This was before that.
12 years ago.
That's fantastic. Last question is for both of you. If you could give one piece of advice to anyone thinking of buying, selling, or investing in real estate in 2025, what would it be? Starting with Micah.
I would say do your homework early if you can.
Pre-planning is the key.
Yeah.
I see. How about you, Vic?
Work with professionals. Professionals that know the market and stay informed about the changes. The right team will help you navigate any challenges, avoid costly mistakes, and achieve the goals that you've communicated to them clearly.
Thank you. It's an honor to have you and Micah, Vic, for coming to our show.
And we love, having trusted partner like both of you, as well as having other partners that we trust that we can, help our clients and serve them.
Yes. We are in a business group together where Vic specializes in residential real estate brokerage, and he's also a great mentor to new real estate agents. If you are newly licensed and you are looking for a brokerage, Vic is the best choice I recommend. And Simon is my commercial real estate loan officer. He will handle multiple loans, and if we are looking for small business administration loans or commercial real estate loans, go to Simon. Yeah. Micah is our residential real estate mortgage lender. If you have need for any residential purchase, you are looking to refinance or FHA, if you are looking for veteran loans, call Micah Peterson. All right. I will list their contact information on the screen below. Until then, see you next time.